From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 104.1.
Hey, thanks very much. Welcome back. This portion of Hurley in the Morning brought to us by the official, the exclusive financial advisor to the Hurley in the Morning program. He is Chuck Malamut in his 26th All-Star season here on the Hurley in the Morning program. By way of just a little bit of brief background, Chuck is the managing director and the leader of his team, the Malamut Group at Morgan Stanley's Northfield, New Jersey office. You can reach Chuck and his group by dialing 609-383-2010. That's 609-383-2010. The following program is presented weekly by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck will be covering over the next 40 minutes. He'll be covering the market update, and it's still, the Trump rally has been just amazing. He'll be covering economic data, and this has also been a bright spot. The political environment, equity market leadership shifting. Where do we go from here in general? Also, the Federal Reserve Board is meeting tomorrow, I believe, at 2 p.m., and I long ago made this prediction, and I know in my heart of hearts, I knew then I was right, and I'm sure it's going to happen. They're going to raise interest rates tomorrow, and of course they would not do it before the election because, and I hold Chuck harmless of this statement that I consistently make because it's not fair to Chuck, but I believe it's true, they are highly political. Coming up right after the break, or right after Chuck's program in the 9 o'clock hour, Dr. Bob Zlotnick in a special town hall edition of Under the Influence, Bob's monthly program. And this is a very significant topic. I've been saying this morning in the run-up to Bob's program that I believe it's an epidemic, not only in our community, and we're going to be focusing on Atlantic County, but I think it's an epidemic around the entire country, and that is the issue of underage drinking, how absolutely serious this is in terms of people that are getting sick, people actually that are dying. They could die in many, many different ways. People that have actually drank themselves to death, that have had crashes that have killed themselves and hurt and killed other people. So we're going to be talking about that. We're going to be talking about the strategies and the policies that most effectively reduce underage drinking in our community. And this is presented by Atlantic Prevention Resources in the interest of the community, also by Communities Talk, town hall meetings to prevent underage drinking, and it's funded by Atlantic Prevention Resources. And I'll give you the acronym SAMHSA, which stands for a federal entity called Substance Abuse and Mental Health Services Administration, which is a branch of the United States Department of Health and Human Services. And this federal agency is charged with improving the quality and availability of prevention, treatment, rehabilitation services in order to reduce illness, death, and so on. So that's coming up in the 9 o'clock hour. Now, without further delay, he's been standing by allowing me to promote other elements of the program. Chuck Malamut, welcome.
Good morning, Harry.
Good to see you.
Good to see you. It's a tough hour to follow after you and Kirk. There's no doubt about it. So we'll do the best we can. I won't repeat. I don't think we're going to repeat what I said to you guys off air, but
it was very colorful.
Yes, it was for sure. But so,
Chuck, would you like to just maybe genuflect once to the leader of the completely for entertainment purposes only Malamut football pool? Would you just genuflect just once?
Well, Harry, I've done it now 2 weeks in a row, and I'm really starting to hurt myself a little bit.
I have never led this late in the season. And there's still 3 weeks to go, though. I could. You know how it goes, Chuck. One bad week.
Harry, I think I'd probably, I would.
You downplay a little bit.
I would keep my wins to the side, and I would probably hide under a rock with the hope and expectations that I can continue on the trend. And then at the very end, if it does in fact work out, then
Well, I'll tell you what I'm loving about this
I'll
season.
do my flexing.
I've been very consistent. Like this week, 8-8. Very unlucky 8-8, by the way. I mean, for example, New England should have covered. What people have to appreciate is it's very challenging to pick a winner in a game where you also have to be mindful of the point spread. So in other words, it's not who's going to win the game. It's who's going to cover the spread. So the losing team, if they're getting a lot of points, might be the team you pick because you think, hey, they're going to lose, but they're going to lose by a certain spread that would mean the points they get means you win. So it's very interesting. And what I've been most pleased with my performance this season, Chuck, I've had a couple of really good weeks, like 12. I think one time 12-4, 11-5, several 10-6. I've consistently been 8-8, 9-7-ish, which, you know, when you pick up a game every week over 14, 15 weeks, and a couple are even better than that, you're where I am, 18 games over. So I've been consistent, but not spectacular.
Harry, it's not over till it's over.
No, but
congratulations.
But it is where we are right now. That's all I'm saying. I'm expecting to lose because invariably, because I haven't had that week yet where you go 3-13, 4-12. I haven't had anything close to that. I've only had like one losing week, and I was 7-9 or something. So anyhow, that's unrelated to what we're here to do, but I'm still proud of it. Chuck, what is the market update?
So Harry, the Trump train, continues. I guess full speed ahead. And
I've been pulling the whistle too.
And if you take a look at last week, the S&P, had a magnificent week. It was up 3.1%. As we continue to focus on a number of different themes here, and actually three. As you and Kirk kind of chatted about previously, better economic growth.
Yeah.
Tax, the potential for some significant tax reform that I think has been needed for quite some time, and then the fiscal stimulus that we're going to probably see in next year. So the best performers for the week, Harry, happen to be small caps and financials. And you think about financials for a minute. You kind of chatted about at the beginning of the show. The fact that the Fed is meeting today, meeting tomorrow, and they will, in all likelihood, I mean, it's all but in the bag here, that they're going to increase by 25 basis points.
Yeah.
And it'll be the second time in about a decade that this has happened. So, actually the last hike, if you recall, was December of last year, 2015. Mm-hmm. I think what we have to be really mindful with respect to the Fed is not so much the action that we all believe they're going to be taking, but more importantly, what are they thinking about on a go-forward basis?
So, once again, the language that they use.
Yeah, because here's what's going to happen.
Because the 25 basis points are kind of baked in already, correct?
They are, and if you look, for instance, we buy relatively short-term certificates of deposits, for several of our clients. As you see those rates, for the last couple of weeks, they're up basically 25 basis points as a result of what we think the Fed is going to be doing. But the fact that what we've got to look at is that while the Fed's going to, in all likelihood, raise rates, central bankers, across the world are going to move a little more slower than what we're doing here, and pay particular attention to the risks of higher yields outside U.S. and the one thing that we while it's a good thing that most of us believe is a good thing is a higher U.S. dollar.
Yeah.
But a higher U.S. dollar at some point in time becomes detrimental, to all of us, especially for those looking to do a number of exports.
Chuck, I'm looking at a number, and I know you don't get hung up on some of this stuff because, you're in it for the long haul, and this is why you're extremely successful for all these years. But this, I think it's at least it would be memorable. The Dow is a whisper, basically under 19,800 as we speak, which means it's potentially a couple of good days or one great day away from doing something we've never seen, which would be Dow 20,000. Does that move the needle in your universe? Does that matter? What do you think about that? Now, of course, the market's coined a term called Trumpophoria, and there's some articles I read prior to your show, Chuck, where they're talking about, is it running out of room? Because it's been an amazing run since November 9th. But if we got to 20,000, with the Dow Jones Industrial Average, what do you say to that?
The number's a number. It's a great number.
It's amazing.
The fact of the matter, and if you look at this, Harry, it's wonderful on the way up.
Do you remember what the number was when you started?
I have no idea.
Like a couple thousand.
We could go back and do that research, but
it's like a couple thousand.
I think what's important here, Harry, is the fact we'll get through 20,000.
Yeah. It's
just a matter of when. And while a lot of your listeners, I'm sure, would like to get to 20,000, today or tomorrow, the reality is, Harry, you can't continue day in and day out, with this upward bias. Eventually, at some point in time, it runs out of steam. And
that's what I was reading this morning.
I think that the one thing that has gotten masked in this whole process is the fact that, it's great that you can peg it on the fact that, all right, all three houses are in concert. There's certainly in all likelihood going to be some significant tax cuts. So we've gone from a.
By the way, see why I thought all the analysts were wrong when I said I don't know why they're wishing for the other person and wishing for all that when this is really everything they're compatible with. When the president lowers personal and corporate tax rates and all these other things that he's going to do, there's a potential here. We could have a heck of a run.
Yeah, and I think, Harry, what someone or some market suffers as a result of that.
Yeah, sure.
And I think that those that owned an overweight in fixed income are not necessarily enjoying the equity rally that we're having because, as yesterday, for instance, the 10-year pushed through 2.50%, backed off slightly. It was like a 247, 248. Significant move from where we were, back this past summer. Because think about it, and I'll be the first to admit, because everyone in our organization, including our organization, was totally convinced that we will be looking at Hillary Clinton as the next president, and it would be more of the same, lower interest rates, a muted equity market. Job growth, as you and Kirk talked about, what is the real numbers? It is close to 10%, the unemployment number that we all, and finally the media is recognizing that. It took them, I don't know, maybe they finally listened to you, but maybe they finally turned around and said, okay, we got to really report.
Well, they're warming up for the new guy. That's what it is. They're warming up for the new guy. That's all.
I think that the economy, wouldn't it be nice if a lot of the fiscal stimulus that Trump and his administration is proposing, it gets worked into the process. It's going to take some time, but wouldn't it be nice for us to report, hey, we're at GDP at 3, we're GDP at 3.1%. Just to roll that off our tongues, and to see people's reaction and the fact that. We are going through sort of a life change here. And unfortunately, there's a lot of people that don't want to see that happen.
Well, I'm not one of them because I see trillions of dollars coming back in the country when that is set at 10% penalty. I see tremendous job growth. I see opportunity. I think it's going to be a time of potentially unbridled prosperity if we do this right. Chuck, first break, you can continue your market update and all the other things. And it's not on our agenda, but I think we should make it on our agenda, even though you touched on it. The Fed meeting tomorrow at 2 p.m., what this actually means. Does that mean that in the near future, your mortgage rate, if you were looking to refi or to get your purchase done, There are some people that if it were to increase, they could qualify yesterday and not qualify tomorrow if the margins are that close. So I want to see if Chuck will be willing to address that. And Chuck, I just have a very brief 2-part quiz, open book quiz, if you will agree to participate. And because I don't want to browbeat you, you have to say yes or no. Will you participate?
I will participate.
Thank you.
Harry.
We're going to do it right now before the break. Chuck, in that beautiful glass case, what's in that glass case? Just a one-word answer.
Harry, it's a magnificent red velvet crown.
Crown. And who wears a crown?
Usually the king.
Thank you. We'll be right back. He's Chuck Malamut. I'm Hurley in the Morning. And this portion of our program brought to us by Dr. Alan Chenman, the official, the exclusive dentist to the Hurley in the Morning program. And between Dr. Chenman and Dr. Henry Salama, they literally do it all. They practice the full scope of general, cosmetic, and implant dentistry. You go, I've asked you to do this before. Dr. Chenman, his pedigree is just unbelievable. Go, you know him. Go Google Salama, Salama. If you put Salama DMD, you're going to be blown away how credentialed. He has actually innovated new technologies for implant dentistry that reduces the amount of time. If you're doing an implant the right way, I know you hear these things, they do them in one day. You typically have an implant put in. You have to, first of all, you might have to have a tooth extracted. You're going to wait 6 months before you have the one implant put in. Then after the implant is put in, you're going to wait another 4 or maybe 5 or 6 months, and then you'll actually have your new tooth put in. And they are so incredible at what they do. They do it all. Porcelain veneers, I mentioned dental implants, crowns, as Chuck mentioned, crown, bridges, he's laughing, bridges, inlays, onlays. Dr. Chenman can now correct a wide variety of the so-called permanent cosmetic dental problems. Check out his work at SmileCenterNJ.com. Click on the Smile Gallery, and you will see actual photos unretouched of before and after cases. They're at 1999 New Road, Suite D in Linwood. The phone number to make an appointment, tell them I sent you, because they literally keep a book, a list of Hurley in the Morning referrals, and there are many. 609-601-2199, general and cosmetic dentistry, perfecting the art of beautiful smiles. Don't forget, at least once every 6 months, you want to make an appointment with Lisa, who is I call her the dental hygienist from NASA, because her technique, her equipment, the job that she does is so incredibly thorough. And although it's not official, she'll also do an oral screening. And if she sees something of concern, she'll tell you to go see your doctor and have it checked out. So then if something is going on, she will catch it at an early state. That's just a bonus. And again, she's not going to qualify that, but she'll just do that inspection and tell you if she sees anything that you should be concerned about, and then you would see your doctor, your professional that specializes in that. Don't forget, the first step towards a beautiful, healthy smile is to schedule your appointment. So you most likely will speak with Shannon. Tell her I sent you. Call 609-601-2199, and you can check them out as well on the World Wide Web at SmileCenterNJ.com. Back with Chuck Malamut in 30 seconds. Your official financial advisor to the Hurley in the Morning program. You can reach Chuck and his team, the Malamut Group, at their Morgan Stanley Northfield office, 609-383-2010, 609-383-2010. Let me ask you a question off the schedule today, and that is, I talk about your concept of total asset management with the all-important asset allocation. Explain to your listeners why that's so important.
Well, Harry, imagine for a minute, we'll go back to 2008 when the market, was down in excess of 45-50%. So a total equity portfolio would be down by that same margin. If you had a balanced account with a fair amount of fixed income, in all likelihood, you would probably be down maybe 15-20%. So now it's just the opposite is happening, where if the Dow, the S&P, the NASDAQ, are all up substantially. And, if you take a look, for instance, the S&P going into yesterday, year-to-date was up 12.9%. In all likelihood, with a balanced account with fixed income, and fixed income just having a very, very difficult month. Munis were down about 5% for the month of November all to itself, that your balanced account would probably be up somewhere, in the range of maybe call it 7 or 8%. And what, it's more, Harry, protecting, your wealth versus making some very, very not very good decisions, which could ultimately come back and haunt you in the future. And I think what a financial advisor really needs to do is to understand what the client's goals, dreams, wishes, desires are. And that, for us, is the number one step.
Then you formulate the plan to get them there. In
establishing any relationship. And, you constantly go back to that. What is the probability of your success? Your success being in retirement, funding weddings, buying real estate, whatever it may be, funding college education. You can put all that into your what I'll call your wish list. We drive out, the benefits of Social Security, pension, 401ks, and then ultimately we come out with a probability of success. And then that probability of success is measured up to 1,000 different trials. And then on top of that, what we do is what I'll call, what we talked about a minute ago, a bear market scenario. What happens if you put your money to work under this model, and a year later we're faced with what happened in 08 and 09? Is your probability of success, now has it been diminished significantly? Has it been diminished slightly? And I think what all of us have a problem working or dealing with is the fact that you want to catch everything on the way up. For those that don't take a lot of risk, all of a sudden want to take a lot of risk. And on the way down, it's an awful process, because a client, a prospective client, would say, "Well, how come you did this to me?
Yeah.
Why did you overweight me in equities based upon our particular risk tolerance?" So, we're very, very mindful of that. And this is not a sprint; this is a marathon. And it is such a pleasure to see clients that have been with us for 20 plus years be able to meet their retirement goals, live a very, very nice lifestyle within the means that they established. They said, this is what we want to get accomplished. And you never realize it until someone has retired for any of a number of years. And they say, I can put my head on the pillow at night and rest and sleep comfortably knowing that everything is being taken care of. Now, look, I don't think anyone would have ever predicted in October that the market would be where it is today. I think the great majority of people, including a number of firms and our strategists inclusive, were convinced that Donald Trump was going to win. And then
we're not convinced.
We're convinced he was not going to win.
Yeah, was not going to win.
And then the night of the election, if you remember,
give him my number next time.
Okay. And you remember the night of the election, the market was very, very concerned at about, anywhere from 11 p.m. until 2 a.m. or whenever, Trump went out and made his acceptance speech, or victory speech, we'll call it. And there were a lot of things in place even before that. I mean, we kind of talked about it last week. And the fact is that the numbers are starting to get better.
Yeah.
So, the media, the markets need to pin it on something. So, in this case, we're going to call it the Trump train, the Trump rally.
Love it.
But you think about it, November payrolls, confirmed that the job market was healing. Manufacturing, is starting to gain some momentum. Consumer business confidence, advanced, since the election. And I'm really curious, Harry, to see what happens with Christmas.
Yeah.
I mean, Christmas is going to really be the telltale sign. Is the consumer out there willing and able to spend? Now, whether it's at the bricks and mortar or whether it's, through internet purchases, but I think that's going to be a very, very good sign.
Yep. My prediction, we're going to go to the bottom of the hour break. and then we'll come back. I know Chuck has more economic data. We're going to find out if it's continuing to improve, the political environment, equity market, leadership shifting. Where do we go from here? We have a lot more to talk about with Chuck. And my prediction, Chuck, bricks and sticks, bricks and mortar will be down, but internet will be up because more people are doing it. It's so convenient. More people are just doing electronic shopping. I think the number is going to be up, and I think that will, in my layperson's opinion, I think that will be positive news in terms of the optimism. People, when they're optimistic, are not afraid to spend. If you're worried about your job, if you're worried about money, then you might hold on to it. So I think there will be spending, and I'll be following that with Chuck very closely. Chuck, I'm going to hold the bottom of the hour break for a minute or so to give you an opportunity to answer this, because it is basically the middle of December. There's only a few weeks. Something that you always tell your listeners, and a lot of them your clients and potential clients, to make sure that they do, is to pay attention before the end of the year if there are things that they could do to improve their position.
Yeah, Harry, good point. Tax loss harvesting, or tax harvesting we'll call it, because whether you have realized gains or realized losses and you want to offset them, this is the time of year to do it. The one thing that a lot of listeners are not really paying attention to is mutual funds are obligated to pay capital gain distributions on an annual basis. And that's based on, not so much the performance of the fund, but the gains of the fund had taken over the course of the year. There are some funds. Last year, 2015, was a very, very challenging year because of the distributions were just significantly higher than where they are today. But there are a number of funds, and there are a number of widely held funds, and I wouldn't be surprised if your listeners own some of them. You need to really understand what the capital gain distributions are, because, if you have the ability to do an offset in any way, shape, or form, now is the time of the year to do it, because come December 31, books are closed, and you're going to be paying taxes on that phantom income, and this capital gain distributions come April 15th. So you have some time. Do not procrastinate. We talk about this all the time. And then the worst thing is when you hear from a prospective client, oh, my goodness, I paid this huge tax bill and I didn't really need to do that.
Yeah, very good advice, Chuck. Important part of your program that you just shared. You're listening to Chuck Malamut. Chuck is the exclusive financial advisor to the Hurley in the Morning program. Chuck and I go way back. We've been doing this show for now well into our 26th year. We've been doing it now for over 25 and a half years, every Tuesday morning in the 8 o'clock hour. For all of your financial planning needs, I unconditionally strongly recommend that you choose Chuck. Choose the Malamut Group. Chuck is the managing director. He leads his group at Morgan Stanley's Northfield, New Jersey office, 609-383-2010 for all of your financial planning needs. This portion of our program is also brought to us by Harbor Pines Golf Club, the exclusive golf club to the Hurley in the Morning program. It's my pleasure to tell you, and you still have a few weeks to put this on your calendar, because it is a wonderful way to ring in the new year. Harbor Pines Golf Club, owned by the legendary Gerwicks family, presents its 2016 New Year's Eve party, Dress to Impress, Ring in 2017, on December 31st, 2016, from 8 p.m. until 12:30 a.m. I saw all kinds of people, legends. Chris Ford and Chuck's mom. Everybody at Harbor Pines New Year's party. It is wonderful, lavish hors d'oeuvres, open bar, new and improved surf and turf dinner. I will tell you, the old and unimproved surf and turf dinner from last year was absolutely a 10 on a 1 to 10 scale. Plenty of dancing, the returning DJ, hats, noisemakers, and a midnight balloon drop. It is a wonderful event. You're going to love it at Harbor Pines Golf Club. Hope to see you there at 500 St. Andrews Drive in Egg Harbor Township, $89 per person. You do need to reserve in order to attend. Call 609-927-0006, extension 23, and please tell them the Hurley in the Morning sent you. More information about this and many other things happening at Harbor Pines Golf Club on the World Wide Web at harborpines.com. More with Chuck Malamut in just a couple of minutes. We're back. It's 38 minutes past the hour. You're listening to Chuck Malamut. And I know, Chuck, in our power segment here, we've covered a lot of important stuff, but we have a lot more to still cover. And I'm not sure your schedule this morning, if you need a little extra time, the time is yours. But did we need to further cover economic data?
All right, so yeah, let's kind of roll through a couple points, Harry. We've had stronger economic data that carried us through the November numbers that we kind of chatted about. In particular, manufacturing has increased. Purchasing managers' indexes in both the U.S. and Europe have improved significantly. And, we could spend a whole segment about Europe, and unfortunately, it's still, a little messy there. So the one thing that your listeners should be aware of, you might want to take a look at the allocation that you have with respect to international. While the U.S. is, we've gone very, very far, very, very quickly, you might want to be just real careful in what you own outside, the domestic U.S. So on a go-forward basis, everything that Trump and his soon-to-be administration has talked about, the proposed tax cuts, the spending, the regulatory plans, you just don't flip the switch in the middle of January. This is going to take some time. So the economy might not feel, Harry, the effects of what is proposed and what will ultimately get into place into sometime in 2018. So the one thing you need to be cautious of is that, the market will, in fact, at some point in time, have a pullback. And don't be surprised, 5 or 7%, and it wouldn't be unlikely that it happens. Not that we're going to predict when it happens, but it might not happen, Harry, until we get into next year. As we look in the equity market itself, so the economic growth that has improved. Think about what you and Kirk talked about, and we've talked about in the past: slow growth. Low inflation. I mean, that for the most part, benefited growth stocks, and the perceived safety of what we'll call bond-like income sectors of the equity market, like utilities. So if this economic growth does in fact accelerate and inflation moves higher, which we believe it will be, we'll probably see an environment that could be very, very advantageous to cyclical stocks and to value-type stocks.
Let me throw one out, Chuck. I know that and I want to make it absolutely clear, disclaimer, Chuck doesn't recommend a particular company, a particular stock. I want to bring up an industry, though. By way of telegraphing during the campaign what his policies would be, I would have to believe that energy has an opportunity to have an incredible boom time. I mean, oil, shale, natural gas, electricity. I just have a sneaky suspicion. If the Keystone XL pipeline gets green-lighted, there's another pipeline that's stalled right now that I think would get green-lighted again. I'm just throwing that out there, Chuck, just because I think it's interesting. What are your thoughts about that?
Well, Harry, I think there's a number of sectors to look at. Energy is one. Financials. Financials for the longest time really did not participate in the last market rally, and there's been all kinds of discussion with. I don't think it's going to be repealed, but Dodd-Frank, the Volcker Rule, the fiduciary standard. I mean, I go on and on and on with what government has saddled, financials, particularly banks, to work with. I think a lot of that is either going to, be repealed.
Also
ratcheted down somewhat.
And also look at appointments, Chuck, because they really do tip what's going to happen. The Goldman Sachs chairman is going to be in a key position. Other financial, people, have been mentioned by name and by inference. I think it's even a stronger likelihood that sector can boom even more than what I said, and I still believe that the energy sector is going to be in for a heck of a ride. And I mean that in a positive sense.
So, in addition, so you have banks, particularly financials, pharmaceuticals.
Yeah.
Not so much healthcare stocks, but pharmaceuticals. And healthcare, as you know, unfortunately, year to date is the worst performing sector. Biotechnology, infrastructure. Those are, some of the areas that you might want to take a look at. Do you own individual stocks that are in those particular sectors or subsectors of the market? Do you own mutual funds or exchange-traded funds that have an overweight in those particular segments of the market? Something to seriously take a look at. Now, a lot of those sectors that we talked about and subsectors have had a pretty good move from the election. So, again, you just have to be cautious of what you're buying and the timing of that particular purchase.
Chuck, I know you talked on the edges a bit. Is there anything more about the political environment that you want to share with your listeners?
Well, Harry, I think we pretty much, we covered that. We talked about, the movement of funds and assets, and, particularly you've seen a lot of money leave fixed income. Mm-hmm. I'm not here to trash fixed income. I think fixed income is a very, very important part of everyone's portfolio, and for those that are looking, for long term, if you take a look at what happened with municipals in particular, probably not a bad time to do some dollar cost averaging in as a result of what happened during the month of November. So where do we go from here, I guess, is your next question.
Yes.
Generally speaking, we have a positive outlook towards the economy, earnings, and the equity markets. There are some risks that I think your listeners need to be aware of as we get into the end of this year, beginning of next year. The fact that markets did make a move very, very quickly over the last month. The main risk of the equity markets right now is that increase in government bond yields that we talked about a few minutes ago. The rising value of the U.S. dollar. A rising U.S. dollar could ultimately choke off, some of this growth. So, higher bond yields could create a drag on equity valuations, and a higher dollar puts pressure on corporate earnings. And corporate earnings are finally coming out of that trough, and we're starting to see some decent earnings on a go-forward basis. There's some negatives with respect to Donald Trump's presidency. Escalating geopolitical turmoil. We see it every day. The tweets that come out. What is he saying? Who is he saying it to? Potential currency wars with China, anti-immigration or anti-globalization trends. Investors may become aware of or wary of the improving sentiment and less attractive valuations. But so look, on a go-forward basis, pro-growth, I think, is something we need to look at. Risk-on areas of the global financial markets should do relatively well, Harry. But this is, you think about it, from the end of the summer, investors have become very, very, quiet, not concerned about risks and the possible negatives. Moving assets into the higher risk market, so to speak. Market sell-offs for the most part, Harry, have been very, very brief and followed quickly by strong moves on an upward basis. So with that shift and the solid economic growth that we're seeing in the future, it should make sense to retain an overweight in equities. The U.S. markets, I think, Harry, as we mentioned a few minutes ago, look a little more attractive than what we're seeing here overseas. I think Europe's still a little sloppy. And as a result of that, the more expensive valuations are probably set forth and okay within the U.S. versus what we're doing overseas. So with that all being said, the old expression, you got to sleep with one eye open. I think that's something that we need to, be somewhat conscious of. And because like anything else, you move, everybody's happy right now. We're happy. You're happy. Your listeners are happy.
Very happy.
We're coming into the
Ecstatic.
holidays.
I was sick in Disney World and I'm happy.
Everything is great, but I would, not to be the doom and gloom. That's not what we tend to be here. But we want to be realistic.
Well, you're very good, Chuck. I mean this sincerely because we kid each other, but I mean this sincerely. You're very good at not getting too high or getting too low, and steady as she goes. And that's the kind of steady leadership, which is why, in my estimation, you're the best at what you do.
Harry, thanks. We'll be back again next week.
Look forward
as
to
we
it.
we're down to what, 6 weeks is the
Well,
the inauguration.
count-
What's the countdown? What are you up to?
It's pretty simple.
You got your clock there?
Of course.
38 days, 3 hours, 11 minutes, 36 seconds. Okay.
Who's counting, baby? I am.
Harry, thanks for having me.
Have a great day. You've been listening to Chuck Malamut. He is the official financial advisor, exclusive financial advisor for the Hurley in the Morning program. And the program that you just listened to was presented by Chuck. He is a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program each week are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation by Chuck is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. We'll be back in just a few minutes. Dr. Bob Zlotnick, he's had more promos from me today than I think in the entire history of our relationship, as I've been very much publicizing this special edition, this town hall edition of Dr. Bob Zlotnick, the president and the chief executive officer of Atlantic Prevention Resources, his monthly program, Under the Influence. Today's program topic will be a discussion on underage drinking in Atlantic County, the strategies and policies that most effectively reduce underage drinking. I've been calling it an epidemic. I'm going to see if Dr. Bob agrees, but he'll be talking all about this. It's presented by Atlantic Prevention Resources in the interest of the community and by Communities Talk Town Hall meetings to prevent underage drinking, funded by Atlantic Prevention Resources, also by a federal agency that is charged with improving the quality and the availability of prevention, treatment, and rehabilitation services in order to reduce illness, death, and some of the other maladies that are direct, result of this kind of conduct. And this government agency is an official branch of the U.S. Department of Health and Human Services. The acronym is SAMHSA, which stands for Substance Abuse and Mental Health Services Administration, again, a branch of the U.S. Department of Health and Human Services. I think Dr. Bob might even be impressed with the show prep I've already done. I think he's shocked.
I am. I'm flabbergasted.
I do my work, Bob. We'll be right back. Bob has a nice guest with him as well. We have one more power segment in this hour, and then the 9 o'clock hour, you know where we're heading, a very important discussion coming up next in an official town hall edition of Dr. Bob Zlotnick from Atlantic Prevention Resources.